Welcome to Investify, where we dive deep into the heartbeat of the stock market, analyzing trends and unveiling the secrets behind the numbers. Today, we embark on a fascinating journey through the recent accomplishments of the S&P 500, the tech titans leading the charge, and the stark contrast between Wall Street's success and the average American's financial struggles. So, buckle up as we explore these intriguing dynamics that shape our economy and personal finances. Let's start with a milestone that's been capturing headlines. The S&P 500 reaching a new all-time high for the first time in 2 years. This isn't just a number. It's a testament to the resilience and potential of the market, driven by stronger than expected consumer sentiment data and inflation expectations falling to a 3-year low. Imagine the sentiment among investors as this index, a barometer of the health of the U.S. economy and a benchmark for countless investment portfolios, climbs to unprecedented heights. It's like watching a phoenix rise, symbolizing not just recovery, but a new era of prosperity. But who's leading this charge? Look no further than the tech giants, with Nvidia at the forefront, boasting an astonishing 100% increase since its last high on January 3, 2022. Microsoft, Meta, and Apple aren't far behind, with Meta reaching new highs and Nvidia showing a 26% increase year-to-date. It's a tech-led rally that underscores the sector's dominant role in our digital age. MasterCard and Visa also joined the ranks with substantial year-to-date increases, highlighting the broad-based nature of this rally. These figures are not just impressive, they're a beacon of optimism for investors and a sign of the transformative power of technology and innovation in driving market growth. However, as we revel in the success stories of the stock market, it's crucial to pause and consider the economic contrasts, painting a more complex picture of our society. Despite the highs of Wall Street, a recent Axios survey reveals a stark reality. Nearly 40% of Americans rate their financial situation as poor. This disparity between the exuberance of the stock market and the economic realities faced by everyday Americans is more than just a financial gap. It's a reflection of the underlying challenges and inequalities that persist in our economy. Now, I want to hear from you. In the comments section below, share your thoughts on how we can bridge the gap between Wall Street's success and the financial struggles of the average American. And if you're enjoying this deep dive into the complexities of the stock market and economic disparities, don't forget to subscribe to Investify for more insightful content. Transitioning into the next phase of our discussion, we delve into the profound impact of the COVID-19 pandemic on the economy and the government's response. The pandemic ushered in a wave of economic changes, from job losses to the distribution of stimulus checks aimed at providing relief to millions of Americans. Yet, it's important to note that while many struggled, big businesses saw substantial growth, further widening the gap between Main Street and the affluent avenues of Wall Street. This divergence underscores the uneven nature of the pandemic's economic impact. The storyline doesn't end there. The aftermath of the pandemic also set the stage for inflationary pressures, a direct consequence of supply chain disruptions and rising commodity prices that began in late 2021. In response, the U.S. Federal Reserve took decisive action, raising interest rates in an attempt to curb inflation. This move had a ripple effect across the economy, pushing mortgage rates to a staggering 7.7% and escalating overall borrowing costs. To put the financial strain into perspective, U.S. household debt soared to $117 trillion, with credit card debt alone surpassing the $1 trillion mark. The Federal Reserve's current stance is one of caution and restraint. By maintaining higher interest rates and continuing to reduce securities holdings, the Fed aims to stabilize the economy. However, this approach signals a period of tightened economic conditions ahead, with potential implications for business workforce reductions. This delicate balance between controlling inflation and fostering economic growth presents a complex challenge that will undoubtedly shape the financial landscape in the months and years to come. As we delve deeper into the economic narrative, the spotlight shifts to the realities of the job market, reflecting a nuanced picture of the post-pandemic recovery. According to the Bureau of Labor Statistics, certain sectors are bearing the brunt of economic shifts, with notable job losses in courier and messenger services, departmental stores, food and beverage retail, and administrative services. These statistics are not just numbers. They represent the livelihoods of countless individuals navigating the uncertainties of a changing job landscape. It's a stark reminder of the ongoing adjustments and challenges within the economy, impacting workers across various industries. Turning our gaze towards the stock market, the current highs paint a picture of optimism, largely predicated on the assumption that the Federal Reserve will cut rates. However, beneath the surface of this bullish outlook lies a sea of uncertainty. The potential for a major crash looms if key players report declining earnings, signaling a precarious position for investors and the broader economy alike. This scenario underscores a critical aspect of our current economic condition: the appearance of robustness, largely supported by deficit spending. While such measures provide temporary relief, they fall short of fostering real wealth enhancement for the average American. The reliance on fiscal policies to sustain market highs raises questions about the sustainability of this growth and the potential long-term implications for economic stability. As we explore these complexities, it becomes increasingly clear that the path to a balanced and inclusive economic recovery is fraught with challenges. The stock market's performance, while indicative of investor confidence, may not fully reflect the underlying economic realities faced by many Americans. This disconnect between Wall Street and Main Street emphasizes the need for a more holistic approach to economic growth, one that prioritizes long-term stability and equitable wealth distribution. In this context, the future of the stock market and the broader economy remains a topic of intense speculation and concern. The interplay between job market dynamics, fiscal policies, and investor sentiment will undoubtedly shape the economic landscape in the coming months and years. As we stand at this crossroads, the importance of vigilance, informed decision-making, and a commitment to equitable economic practices has never been more critical. As we look ahead to the 2024 earnings landscape, concerns are mounting over the possibility of stagnating growth across most sectors, attributed to an overarching economic deceleration. This slowdown signals a cautionary tale for investors and analysts alike, suggesting that the exuberant highs witnessed in the stock market may not be sustainable in the long run. The potential for a significant market repricing looms large, especially if a recession hits or if earnings among key market drivers fall short of expectations. Such a scenario could lead to a recalibration of market values, impacting investor portfolios and the broader economic sentiment. This brings us to a critical juncture in our exploration of the stock market and its broader economic implications. The journey we've embarked on today reveals a complex tapestry of achievements, challenges, and uncertainties. The S&P 500's record highs and the remarkable growth of tech giants stand in sharp contrast to the economic disparities faced by the average American and the looming risks of market volatility. As we close today's discussion, I urge you to reflect on these dynamics and consider the broader implications of our economic decisions and policies. Remember, the health of the stock market is just one piece of the puzzle. True economic prosperity requires a balanced and inclusive approach, one that considers the well-being of all citizens. If you found today's video insightful, please give it a like, subscribe to Investify for more content like this, and don't forget to hit the bell icon to stay updated on our latest videos. For more financial insights, be sure to watch our latest video. Together, let's continue to navigate the complexities of the market and empower ourselves with knowledge for a brighter economic future.